screens. Look, perfect. Okay, so let me share my desktop.
Face.
Share
See that? Yeah. No, I got my face off. They can see you. Don't do that.
All right. So the last class that we had, you all, we went over basic information that you need to gather when you're meeting with the client the first time, whether that's an in-person meeting or they're going to just give you their documents, and
Right.
you're going to just prepare their taxes. And so like I said, I did go over the information such as you need a copy of their driver's license, social security cards, birth certificates for their kids, and copies of income, bank account and routing numbers, and very important, an identity protection pin. I just did a tax return for a client last week, got everything done, got it submitted. I didn't even think to ask the question, got it submitted, and guess what? It bounced back because we had to have that pin. And that's becoming more and more common now, that people are getting those pins. And you don't have to be a victim of fraud to get one. So it's not a bad idea. Just know that if you get one, you're gonna get a new one every year. So just watch out for it when it comes in the mail. We also went over how you determine the filing status of the taxpayer. We went over who qualifies as a dependent, and the test that you go through to see who all qualifies. There is also a summary here that you can go back and you can download as well if you did not. And I have a tax return that we're going to practice on, but I'm going to wait until we go through the next two, and then we'll go back and grab that one for Mr. John Adams. So in today's class, we're going to talk about income. The federal government believes you should pay taxes on every source of income, every dollar that you receive, regardless of how it is derived, whether you get it from working on a job, from working in a business, from selling drugs, from gambling, illegal. They believe that you should pay taxes on every dollar. And a lot of times, if you go back through history and you look and see a lot of the people that they arrested that maybe were big in crime, and they couldn't prove it, almost always they would get them for tax evasion. Al Capone was one. And I'm sure we know even now, artists, you see it all the time, every year, somebody's in trouble.
Yeah.
Who was, huh? Wesley Snipes got in trouble for it. Ronald Isley got in trouble for it. And I mean, those are like the big names, but it's just common everyday people also, because any dollar you make, especially if it's a paper trail to it, you definitely want to count that income. I remember when I was married, and my husband, he thought he could get around not reporting unemployment, and next thing you know, bank account got frozen, and they're like, no, we need to, you got to report it. And so now, post COVID, I don't know if you've been watching the news. The IRS is more aggressively coming after people now. Yes. So they're on this big push to get as much money in because they've lost money. So they're going to be on a bigger push to get it in. So it's very important that our clients report everything, be compliant. If they forgot something for 2, 3, years back, go ahead and get it done. Just get it done, because the last thing you want them doing is knocking on your door saying that you owe, because when they say that you owe, it's coming with interest, penalties, and all that drama. So let's explore some of the common, and these right here just some of the common types of income that we're going to be seeing. W-2, anyone who's got a job. Yeah, I don't know what that is that keeps popping up. Something I did to my computer. So all income from wages, salaries, and tips is taxable. Wages, salaries, bonuses, and commissions or compensation received by employees for services performed. Tips are received by food services, baggage handlers, hairdressers, and others for performing services.
I'll go to that hill to shoot him up, bro. Nana?
Hold on, I'm gonna mute everybody for just a minute.
You said what?
Okay, so that way we won't be over talking each other. And so wages, salaries, bonuses, commissions, and tips may be in the form of cash, goods and services, awards, and taxable benefits. So they're saying they want you to pay taxes. They want you to report all income, whether you take it out in barter, trade, goods, services, and it's up to you within their guidelines to place a monetary value on those goods and services that you barter for. 1099 interest and dividend income. That's you will get that if you have any type of interest from a bank account. 1099 dividend is where you get interest earned on an investment account. SSA 1099 income. That's if you're getting social security benefits. And excuse me, these tax forms show the amount of the benefit an individual received from social security in the previous year. And it's very important that you get that award statement, because they'll just say, oh, I got $300 a month, or $600 a month, just times that times 12. No, you want to actually see that statement, because you want to get the payment amount, Medicare amount, and sometimes some people have taxes taken out of that money. So you definitely want to see that physical statement. 1099-R. If you take money out of a retirement account for any reason, you're going to get a form 1099-R. And it's called the distributions from pensions, annuities, retirement, and profit sharing plans, IRAs, insurance contracts, etc. There are a number of reasons why a retirement account is distributed, but most of all, it's going to fall into one of these different areas. Either you're going to be getting annuity and pension payments, retirement account rollovers, loans against pension plans, and early retirement account distributions. The one I see more often is this one right here, and then just people that have left a job, and they may have rolled it over into another account, or they just taken the money out and they just started spending it. So of course they're going to get a 1099-R, and depending on if they're over age 57 and a half, I believe it is, will determine if they're going to get a penalty as well. So the 1099-R form is an informational return, which means you'll use it to report that income on your federal tax return. If the form shows federal income tax withheld in box 4, attach a copy, box B, to your tax return. And this should be sent to you no later than January the 31st after the calendar year of the retirement account distribution. This part right here, attaching it, disregard that. That's if you're sending in a paper tax return. Now everything is just digital. You fill it out, it's going to upload a copy along with the client's tax return. So when we talk about income, and when you're looking at the software, these are all the categories of income you could actually enter in. to a client's tax return. So of course you got your wage and tax statements. You got your 1099-G, that's if you gotten, that's for state stuff. Schedule, which Texas does not have a state tax, so we wouldn't even hardly see, we wouldn't see this. If you're dealing with someone who's in a different state that has a state tax, then you may see that. Schedule B, we already talked about that. 1099-R, distributions from pensions, annuities, retirement accounts, social security, etc. Form 8915F, qualified distribution, qualified disaster retirement plan distributions and repayments. Saw these during COVID. People took money out. And instead of having to count all the income that year and pay taxes on it, they were afforded the opportunity to pay it out, to report it over 3 years. And then so that way that impact wasn't as great in that first, year. 1099-G, box 1, unemployment. Of course, we will see that here in Texas. 1099 miscellaneous, we don't really see that a lot anymore. 1099 non-employee compensation. That's if you work as a contractor, you're going to see this. So if you work as a contractor for a company, you don't necessarily work for them, meaning they're not taking out taxes, but you do work for them on a contract basis. This is the form you're going to get from them. Schedule C, that 1099 NEC is reported onto this Schedule C form. So this is a type of, this is your profit and loss from a business. 1099-K, this is if you're taking payments through a third party like Square, Cash App, you get a certain amount, I believe it's over $600, $800, whatever, they should be issuing you a 1099-K. So you would have to report that. A Schedule E, that is supplemental income and loss from rents and royalties. Royalties mean mostly oil and, gas checks. So if you, matter of fact, I just did a client's tax return last week. He had a job and then he got about $3,000 from oil and gas, gas payments. So we had to add that in. And it's funny because when you're talking about royalties, they don't take out taxes. So for him, he was doing really good when I did his tax return. He only he was getting back like $16, which he was like, okay, great, I don't care. But then he mentioned the oil and gas, so I had to add, get that form from him because this was a new client. And when I added that, he ended up owing like $400. So it's good to get the money, but when they're not taking out taxes, it does have an impact on your refund amount or your taxes due. Schedule D, capital gains and losses. Schedule F, this is a profit and loss from farming. Obviously, we're in Texas. We may know people who have cows, who farm, who horses or whatever. So anything pertaining to farming would be reported on a Schedule F. So anything from, let me go back to this E, Schedule E. If you have a client that has rental property, that income and those expenses are going to be reported on that Schedule E. So Schedule E is for rent and it's for oil and gas payments. So you could either have a Schedule C, a Schedule E, or a Schedule F. Those are your two big tax forms. Or they could have all three. It just depends on how busy they are. And of course, we all know Schedule C, profit and loss from a business. That's a real big one. But like I say, they may not always just have a business. If it's a farm, you're going to go with Schedule F. Alimony payments, never seen that in Texas. I do believe now if you've been married for at least 10 years, you can receive alimony payments, but I've never done anyone taxes that receives it. Other income, K1 earnings, meaning if you're a partner in a business and that business has a profit or a loss, you're going to get issued a K1 statement. Gambling winnings, yes, if you go to the casino and you win $1,000, they're gonna send you a 1099 for your, your winnings. Cancellation of debt. This is a big one. In that a lot of times when people see it, they don't really know what it is. You'll get a 1099-C that comes in the mail. And what that means is that you've had mostly common a repo of a car. And that car, like they got the car about 5 years ago, just say, okay. And they sold the car, but you still had a balance left over. In that 6th year, because after 7 years, it's going to drop off. So in that 6th year, before it drops off, the bank will issue you a 1099-C for the balance of what's left over on that car. And it's reported as income, and you have to pay taxes on it. So it's like, so not only have you repoed my car because I couldn't pay for it, you prevented me from getting possibly another car because it's been on my credit for 6 years. And then in the final year, right when it's about to drop off, you turn around and send me a 1099-C, and I now have to pay taxes on that money. So it's a it's a never-ending cycle with the autos. Also, I've seen it too with houses. If you've had a house that was foreclosed on, you may get one for that as well. So does anybody have any questions about income? Nobody? Okay, I'm gonna go on to talking about deductions. Well, I know a lot of people have questions about deductions. And so when it comes to how do you save money on your taxes, it's come down to what deductions do you have that are going to lessen your income so that you don't have to pay as much in taxes. So the biggest thing is going to be, are you going to go with the standard deduction, or are you going to itemize? So some people I say, so what is the difference? A standard deduction. Let's go right here. So a standard deduction reduces your taxable income. And of course, I just told you there was 2 types. It's gonna be standard or it's gonna be itemized. A standard deduction is a single fixed amount deduction that is based on your filing status, the age of the taxpayer and spouse, whether the taxpayer or spouse is blind, and whether the taxpayer can be claimed on another person's tax return. We talked about all that in the lesson when we met before. Your itemized deductions are popular among higher income tax payers because they want to have a significant deduction of expenses, and this is where they can itemize stuff like taxes, interest and contributions. So let me jump back over here. So this right here is the standard deduction table. And you can see it actually does change from year to year. So in 2022, the standard deduction for a single person was $12,950. In 2023, it went up to $13,850. And this is a common thing that I see people, they come in and they bring in 2 or 3 pieces of paper. They might have had a house, they paid taxes, they had mortgage interest, they might have gave some $2,000 or $3,000 to their church. And if everything that they bring in does not equal more than the standard deduction, it does not make sense to go through and add up all of that stuff. And they will bring it. I promise you, they will bring it. And if you just kind of eyeball it, add it up off to the side, save yourself some trouble, and just know, I mean, if it's not gonna be more than your standard, we're not gonna take it. We're gonna go with the standard deduction because there's nothing more, honey. When I first started out, I'm not gonna lie to you, honey. They bring me all those little pieces of paper, and I'll sit there and add up all that information. Take me 30, 40 minutes, sometimes more, and it still would not add up to more than the standard deduction. So learn like I learned, kind of eyeball it, and especially if you know your clients. Like I know my clients now. I know who has what going on, who's going to itemize, who's not going to itemize, and that's something that'll come over time and as you know your clients. So we're not gonna. I don't add up all those little pieces of paper because I already know it's not gonna be enough. Now here goes some common itemized deductions that we can talk about. So some of the common ones, a person can deduct up to 2,500 of student loan interest, mortgage interest up to $750,000 of a secured home mortgage debt, contributions to a traditional IRA, 401k, or other qualified plan up to the limits for that year, up to $10,000 of state and local taxes, contributions to a health savings account, medical and dental expenses exceeding 7.5% of your adjusted gross income. So what that means is that if your adjusted gross income is, say, $10,000, only the amount above 7.5% is going to be deductible. So if it's only 2% or 3%, you're not going to be able to take it. Give me 1 second. Let me grab my glasses. I can't see. Self-employment expenses, including the home office, deduction, and health insurance payments, charitable contributions, investment losses, and gambling losses. Now, right here is a itemized checklist, and I put a copy where you all could download it. I'm trying to make the screen bigger, remember, or where we can see this. Okay, we can't see this. Oop, I guess I did. I did make it bigger. Remember, I made it too big. Okay, so then it went away. Okay, so some of the this is an itemized checklist that you can have, you can give your clients again, or you can just use as a reference when you're talking with them and you're looking at what they have. Medical expenses. As you can see, there's a lot of them in here. Doctor and dentist fees, cost of a guide dog, handicap access devices for disabled people, meals and lodgings related to hospital stays, operations, organ donations, weight loss, costs. Those are all fall under items that can be deducted if the client is going to itemize. Taxes, property taxes, foreign income taxes, real estate taxes, value-based auto licensing fee, general state taxes. What I do on here is if the person has bought a car in the prior year, I need to see a copy of your bill of sale so I can get your taxes off of there. Interest expense, home mortgage, second mortgage interest, interest, loan interest premiums covering mortgages purchased in 2007 and beyond, business interest. Mostly what I see on here, and points paid, which is very important. Mostly what I see on here is when they bring you that 1099-M, when they get that final statement, look at that statement because you want to see how much they paid in interest and taxes, because it's gonna be on that statement. If it's added together with your other costs, it's gonna be more than their standard deduction, then of course you want to count it. Points paid. You'll see that when a person has just purchased a home. So just say if someone bought a home last year, I'm going to ask to see their HUD-1 statement, their settlement statement, whatever they call it, from when they bought their house. Points or is just interest that they have paid with the purchase of the house. So you want to, and that's not going to be on that 1099 statement. So you can only get that off the HUD-1 statement. So again, that's something of knowing your client, talking to them, asking them questions. Did you buy a house last year? And most of the time they're going to be telling you anyway, because they think because they bought this house, they're going to get all these wonderful deductions and credits. And so you get a chance to talk with them and find out what they can actually take and what they can't. Charitable contributions. This is a big one. Churches, nonprofit schools, nonprofit hospitals, Boys and Girl Scouts, YMCA, Goodwill. So whenever your clients are donating stuff to Goodwill, make sure they're getting a statement, because you need, in the statement meaning, make sure they get some type of paperwork from them saying that they donated on this date. It's not going to give a breakdown of what they donated. It's up to the client to keep up with what they have donated. And then there's an actual form that kind of gives you the salvage value of items, whether it's clothing, furniture. And I will go back and find that. I just kind of eyeball it because I've been doing it so long. But there is a kind of a little cheat sheet that can tell you how much the government says stuff is, worth. So if you have people who donate a lot, make sure they're getting that paperwork from each company that they donate to, because they will give them a form, and the form is just going to have the company name on there, their tax number, and they're going to write in the date that the client donated. Very important about churches, make sure they're getting a statement from their church saying how much they have donated. And donating to a church is not the same as donating to a ministry, because the person can have a ministry, but they're not necessarily a church. So their churches are automatically grandfathered in to being a 501c3. Some ministries, meaning if they don't have a building, if they're not meeting at a certain time, I have a cousin, bless his heart, he's so sweet. He gave about $30-some thousand away last year to different ministries, not necessarily churches, just ministries. And I'm going through his bank statements and I'm seeing where the person that he made the check out to then went into the bank and cashed it in person. That's not a business. This is just a person that gave him some kind of prophecy, and he gave them a check. Not tax. If it's not a 501c3, it's not tax deductible. So that's very important to understand. Miscellaneous deductions. Gambling losses to offset gains. If you gamble a lot, or you gamble and you're lucky to get over $600 or over $700, and I believe the amount is over $400 still, they're going to send you a 1099 for your winnings. Well, you can write off your losses up to the amount of your winnings. Now, you may have lost $10,000, but you can only take up to the amount that you won as a loss, and that's just a way to offset so that you're not paying taxes on what you won. Now, if you played $1 and you won $10,000, you're doing good, but you're finna pay taxes on $9,999. Work uniforms, job hunting expenses, tax prep fees. And again, this is if you're itemizing on a Schedule A. And so let me explain about tax prep fees. So if you're itemizing on a Schedule A and you pay your tax person, say $700, right? $700 because they did your taxes, but a part of that is I have a business also, so then it's a Schedule C. So that's why sometimes you'll see, well, I don't know if you've ever seen it or not, but sometimes your tax person will give you an itemized breakdown of what you paid per service. So if it's a Schedule A, you might have paid $200 for them to, fill that out. If it's a Schedule C, like that part could have been $350. So you can only deduct the Schedule A portion of your tax return. So if you paid them $700, but the Schedule A was 200, you can deduct the 200 on the Schedule A. If you have a business, you can deduct the 350 of that on a Schedule C. You don't see it very, very often. If you just put it all in there in one, they're probably not going to call you out on it. I was just telling you the correct way is supposed to be done. So if they're going to itemize and they paid $200 to get their taxes done and they want to put that in there, you can. Safe deposit box. Employee business expenses, I can honestly tell you this is very old because this is not even anything you can itemize anymore. So I'm gonna try to find you guys a more updated form. And then some of this stuff is classroom material expense for a teacher. Teachers can deduct up to $250 per tax year for anything that they bought for their classrooms. Of course, they spent more than $250. Actually, I think it went up to $400. But anything that they spent, they can write that off, and they don't even have to itemize that. That actually is deduction that can go on to the tax return that does not have to be itemized for. And so this is just, like I say, these are just some more common things. And then most of these miscellaneous deductions are only deductible to the extent that exceeds 2% of your adjusted gross income. So again, it's got to be more than 2% of your adjusted gross income. Does anybody have any questions about deductions?
I have a question. The in-home office expense, does that pertain to like I work from home?
Mm-hmm.
So I work for a correctional healthcare company and I work from home. So like if I have to buy like even get stuff from my printer and stuff like that, is that considered in-home office expense?
That is considered in-home. However, with that Jobs Cut and Tax Act, Jobs Cut and Tax Act law that passed a few years ago when Trump was in office, it actually did away with that.
Oh, how
So,
lovely.
how lovely, right? It did away with that. So if you're preparing someone's taxes prior to 2017 and they have it, because trust me, you will, because people haven't filed their taxes, you can still take it. But if you'll see it more so if you're self-employed, then you've got more things you can write off working from home. But yeah, no, that Tax Cut and Jobs Act took away a lot of stuff because, like, for example, like oil field workers, right? They were able to write off a lot on their tax returns prior to that law. Once that law came into effect, it did away with that because they were like getting their per diem and mileage, even though because they worked for a company, but they could still take those deductions because don't even ask me why they could, because I don't know why at this point, but they could. And so after that passed, it did away with a lot of stuff. It actually, that Jobs Cut and Tax Act or whatever it's called, it kind of was favored more toward the middle class to like wealthy people, gave them some tax
Oh,
break.
that sounds about right.
Huh?
I said that sounds about
That's
right. That
right.
help
That's about right. Yeah.
rich
So,
people stay
it did
rich.
away with some things that we were able to write off. Now, it gave us some, some other things, some higher limits on the child tax credit, and stuff like that. But yeah, for the most part, some of those little avenues where people were able to get a tax break, it did away with that. And
Okay,
I will actually
thank you.
touch on that at some point, because most of those laws, they were only in effect for a few years. So like I say, I will actually touch on that so that we can kind of go over that, so that we can know those windows and just know when they're gonna end, and they will be ended, and then it'll go back to what it was if Congress doesn't pass a new, law or new bill to continue it. So that's pretty much all I got on the deductions. Does anybody else have any more questions? And I think I kind of skipped over casualty and theft losses. So, which is a big one, especially in Texas. And y'all know how we have floods and storms and stuff. So if you have a casualty, a theft loss, casualty and theft losses are generally deductible to the extent that they exceed 10% of your adjusted gross income, are not reimbursable by insurance, and each event exceeds $500. So y'all know how things flood here in Houston. If you experience a natural loss, some of that may be tax deductible. Again, remember, they're saying as long as it's not reimbursable by insurance. That's the key. So if you've experienced a loss, if something happened, like for example, my coworker, and I'm gonna have to mention this to her, her house, like during this whatever storm we just had, the wind storm, right? Her neighbor's tree fell over on her car and caused damage to her car. Guess what? None of that was covered. Wasn't covered by her auto insurance, not covered by her homeowner's insurance. So getting her vehicle fixed is going to be out of pocket to her. So something like this, she could deduct a certain amount off her taxes if it's above $500 and it exceeds 10% of her, adjusted gross, income. So I know it gets, when you start talking about itemizing, it can get detailed depending on what the person is doing. But if you're a high income earner, it's worth it to you because you're looking to save as much, or they're looking to save as much money as they possibly can. So I get it. So what we're gonna do now, I'm gonna go back to the module before, and we're gonna look at John Adams' tax return. So we have a client, his name is John Adams, and he came to us for us to prepare his taxes. He's single, not married, he doesn't have any children. He had 2 jobs in 2022, and he had a little interest from a bank account. So for the purpose of this exercise, we're going to use his social security number as 45673XX. You just make up something on the XXX. And okay, and the last digits will be your date of birth. So I'm going to do this in class, but I want you guys to do this on your own outside of class. But I'm going to do it first so y'all can follow along and you can watch me do it. And then when you all do it, when you save him into the system, you can do John Adams as his name, and his social security number will be 45673, and the last 4 will be your date of birth. So for example, if your birthday is November 9, such as mine is, then his number would be 456731109. We can have clients in there with the same name. We cannot have clients in the software with the same date of birth. Never. So let me make sure did I upload this? Let's see. Okay, so I'm gonna go ahead and add this document in here because apparently I didn't upload it or I didn't save it when I uploaded it. So let me upload it really quick, you guys, because I want you to be able to download it and see it. Now, publish it real quick. Okay, let me jump back. Refresh this. All right, here we go. So this is John Adams' exercise. Let me just open it up because I want y'all to see what we're gonna be talking about, how I have it set up. And can y'all see my screen still?
Yes, ma'am.
Okay, perfect. Okay. Y'all can see this with his little picture here. This is John Adams. He came to us. He brought us his documents.
Yes.
All right, perfect. Trying to make it bigger. I made it too big. All right, so when y'all download it, this is what it's gonna look like for y'all. So this is his driver's license. He gave you a copy of his social security card. We got his banking information so we can put his tax refund into his bank account. Notes. These are some of the notes from talking to him. John says he also has a bank account at Bank of Newport Richey, but did not receive any tax forms from them. He thinks he only received about $8 in interest. This is his W-2. He works at Ace Construction Company. And very important, let me just point something out, let me pause from here. When you're getting a W-2 from a client, make sure it's all typed. Make sure it doesn't look like it's been altered and that stuff is missing. You should always see the taxpayer social, the company's EIN, the company's address, the taxpayer's, name, address, how much he earned. May or may not be something here, may or may not be something over here. But the main thing is that when you're looking at these tax returns, at these W-2s, well, you want to make sure that they don't look like they've been altered and definitely I would not do one that's been handwritten because you don't know what kind of foolery that is. That could be somebody just making up something. And especially if you don't know them. Now, if you know them, that's different. If you trust them, or you know kind of what happened with their job, or they work for somebody who does everything by hand, it might be handwritten. I don't know anybody, but hey, I don't know everybody. Again, this is his other W-2, and then this is an interest that he got from Bank of West Florida. Now, remember, he told us he had about $8 worth of interest from another bank that he didn't get a statement for. Okay, so you're only responsible for preparing what they give you. If they don't give it to you, you can't make it up. So he told you about it, but he didn't bring it in. So for all intents and purposes, we're going to prepare what he gave us. So we got the 1099 interest. We got a W-2. We got another W-2 because his first company, he works for Ace Construction. He made $14,500. This next company that he works for is Basic Construction Company. He made $12,000. As you can see on here, he has a retirement plan. He's a retirement plan employee for this company. Typically, if you see this checked, there is going to be something over here. It's not, so we're not going to worry about it. And that's because if you look at these numbers, you know he didn't pay anything into his retirement account. And the reason why I know that is because all these boxes are the same. When someone pays into a retirement plan, these boxes will be different. And you see, we're going to be doing, and these W-2s are for the tax year of 2022. So we will go to our tax software. Can y'all see my software page on the screen?
Yeah.
Okay.
Yeah.
Perfect. So y'all see when I opened it up, it's asking me to verify my account. You're probably going to get this the first few times when you log in. After a while, you won't get it. And if you haven't logged in for a while, you'll get it again. So they're going to send you a code. You want to put that code in there to verify you are who you say you are. And then, so like I was telling you, we're going to be doing tax year 2022. So right here, you see where it says change tax year. You can change which tax year you're going to be working in. So since we're doing 2022 for him, I'm going to select 2022. I'm going to start a new 22 tax return. Very simple. Software is so easy, I promise you. So the first thing you have to do is you have to put in the Social Security number. And you have to put it in twice because it wants to make sure you get it correct. So I tell y'all, for this purpose, I'm using 5673149 is what we're using for his. You're gonna get this little pop-up thing that says make sure you get your 7216 consent to use tax return information signed before starting a new tax return. We're gonna say okay. I'll explain it to you all later. We don't want to say the password. My computer always does that. It's so helpful. So, John Adams. Do y'all remember that? He said he was single, right?
Right.
No kids. So we're going to choose which filing status?
Single.
Single. Boom. Continue. Now we get to the screen where it wants his information. So we got to enter in his information. His first name is John. He did not have a middle initial. Last name is Adams. His date of birth on his driver's license is 7/15/1985. His occupation, I'm gonna say he's a construction worker since both of his jobs said involve construction. But of course, we would definitely want to ask the taxpayer what kind of work do they do. So then, very important. Remember, I was telling you about the things that we certain things determine what status they can have. So if the taxpayer can be claimed as a dependent on someone else's tax return, we would check here. He cannot. The taxpayer was over age 18 and a full-time student at an eligible education institution. He was not. Yes, he is over 18, but he was not a student. He's not blind. He's not deceased. He does not wish to contribute $3 to the presidential election campaign fund. I'm surprised that they still ask that. The taxpayer, nor his spouse, because he's not married, did not serve in a combat zone during the current tax year. The taxpayer was not affected by a natural disaster during the current tax year. He did not receive, sell, exchange, or was gifted or disposed of any digital assets in the current year. This is something new. Does he prefer to receive written communications from the IRS in a language other than English? No, he does not, because he speaks English. Taxpayer prefers to receive written communications from the IRS in an accessible format. This is new, but I'm gonna guess that they're talking about digital formats, but I'm not gonna check anything because I've never seen that before. That's very, very new. Address and phone number. He is not in the military, so he does not have a stateside military address. He does not have a foreign address because he lives in Newport Richey, Florida. So now I'm gonna enter in his address, which is 123 North Main. Now, a feature that I love, if you enter the zip code, you don't have to type in the city and state. Newport Richey, he's a resident of Florida. His phone number is required. So I'm just gonna make up a number. Because it is required. Anytime you see a little red star, it is required. You won't be able to go forward without that information. You can add the taxpayer's email if you want to on this screen. We'll come back to that later. So we're not going to enter an email. Dependents. Did he have any dependents?
No.
No. So do you have any dependents or qualifying persons to claim on your tax return? No. So we're going to move on forward. Continue. Pretty easy so far, right?
So far.
So far. So he has what? 2 W-2s, right? So remember when I was telling you, these are all the kinds of income that we can enter in. He's very simple. He doesn't have any of this other stuff. All he has is W-2s, and he has 2 of them. So we're gonna start with the first one. So then this one here is a standard W-2, meaning it's just typed. It's not handwritten. It doesn't have any markouts on it or nothing. This is the original W-2. So you would check this box if it was a corrected W-2. You would check this box if it's a substitute W-2, and you would check this box if it's a railroad W-2. So this is just a standard one. It's all we need to do is check that first box. His name is already defaulted there. His address and stuff is already defaulted there. So now we're going to enter in his employer information. So this one here, the first company is Ace Construction Company. So we go Ace. Oh, I got to start with the EIN. I'm sorry. So that's 505111111. So as you see, somebody has already been practicing. Anytime you enter in a tax ID number of a company that's already in our database, you don't have to enter in everything else, because once you tab out, all of that's going to be filled in for you. So as y'all go in to do yours, when you put in just that tax ID number, all of this is going to default in for you, which is good. Wages and tips. So on this job, he earned $14,500. When you tab out, it's going to automatically fill in Social Security wages. It's going to automatically fill in Medicare wages. He had federal withheld. You have to fill that in, because sometimes people have more taken out. Some people don't have any taken out. $8.99 matches what's on our form. $210.25 matches what's on our form, because based off of this amount, this is what should be in this box. Sometimes it's not. So if it was $8.98, you would need to, change it. Go down to box 13. It says he is a retirement plan employee. So we want to check that box because you want whatever you input here to match the form that you have. So this is all that was on there. There was nothing else on there. And we're going to hit save and add another. Now, if he only had one, we would just hit continue. It's not the end of the world if you hit continue and then they have another one, because you can just go in and just add that one. But it's just much easier to hit save and enter. So then it's going to populate up another fresh screen. If you notice over here on the upper right-hand side, it's calculating the tax return as you enter in the data. So right now, based off that one job, his adjusted gross income is $14,500 and his federal refund is $1,444. If he was owing, this would be red. So green is good. Green means he's going to be getting some money back. So then the next job he had was Basic Construction Company. So again, all of his info is populated there. We're going to enter in the tax ID number for Basic Construction Company, 6111111. Hit tab. Somebody's already done one for this company. So that information is already pre-populated. Your job is halfway done. He made $12,000. Tab. And he paid in $1,200, 10% in taxes. All these other numbers match. $744 in Social Security and $174 in Medicare. I don't have to make any changes because that matches the form. There were no other boxes checked. So we're done with his income. And now, so since we don't have another W-2, I'm going to hit continue. And it's going to take me out. So now we see how his refund has changed. So by we added more income, his adjusted gross income went higher to $26,500. His refund dropped down to $1,226. He's still in the green, but we're still not done. So he also has, he had something else. What else did he have? He had a 1099 interest form, right?
Mhm.
Let me go back and grab that information because I thought I still had it, but I did not. I think I closed my little document out. Hold on. Let me just pull it back up. Because for some reason, I didn't print out everything. I got to pull out this information for his interest. Okay, this is his interest information. Let's take a screenshot of this real quick. I don't know why I didn't get that. Okay. Oh, there it is right there. But anyway, we're good. Okay, so next thing he had was interest income, right? So we're gonna look for interest, which would be 1099 INT. So that's gonna flow to a Schedule B. So we would click here to enter in that information. Then it's very simple. Are you adding interest income or dividend income? We're adding interest income. So we're gonna click there. Choose the type of interest or dividend item that you want to enter. Interest income from form 1099 INT. That's what we have. That's what we want to enter. Select that, click enter. Payer's name. Bank of West Florida. That's the name of the person who paid him this interest. The TIN number is 50711 1111. Country, United States, which is at the very top. It's not gonna be in alphabetical order, thank goodness. Address, as you can see on this form, just because we entered the tax ID number, it didn't pre-populate. So we have to enter everything in. So the address is 567 West Avenue. The zip code 34655, Newport Richey. Interest income in box 1 is $145. That's the only thing on this form. He didn't have any taxes taken out of it. So all we're entering in is the name of the bank and how much he received in interest. And continue. It will be saved and add another if we had more than one form. As you can see, his refund did what? It dropped down a little bit more. Not much, just a couple of dollars. So then we're done. We don't have any more interest or dividend income to add in. We don't have any more income to add in, period, because that's all he had was those 2 jobs and that interest. So we have nothing else to enter. We go scroll all the way down to the bottom, hit continue. Deductions, we're going to take what? The standard, because he didn't have anything. He didn't have a house. He didn't have interest and none of that. So we're just going to go with the standard. There's nothing to do. When you're going to go with the standard, there's nothing to do on this page. You just go continue. Now, if we were going to itemize, we will go here and start adding in stuff. And we'll do that one later. But for this one, because we're just keeping it simple, standard deduction, hit continue. Other taxes, we don't have anything because he's not self-employed. We don't have any of this, and I'll go over this as well, but we don't have any of this, so we're just gonna go what? Continue. We're just continuing to the next section. Payments and estimates, we don't have anything for that because he didn't have any payments other than what was taken out of his W-2s. Continue. Miscellaneous forms, we didn't have anything. We're not filing an extension. He did not have a pen. If he had one, we would enter it on this screen. He did not have one. So we're gonna hit continue. Affordable Care Act, he did not have health insurance. This page here is, you want to report if they had insurance through the healthcare marketplace. That will be reported on a 1095-A. If you work a job, you're going to get a 1095, I believe it is C, from your job. So you get that C, there's nothing to report here. So did y'all have any insurance under the Affordable Care Act? That's the Obamacare healthcare marketplace is called a couple of different things. So we're going to hit no. So then we're going on forward. Tax return is done. Congratulations, you have completed your federal tax return. We are ready to add your states. We don't have a state, so we're not going to even do state. So we're going to what? Continue to summary. And that is the completed tax return. I'm gonna click view so y'all can see the completed tax return. This is killing me. Let's try it again. Okay, here we go. So this is what the completed tax return looks like. This is the face sheet. Gonna have my tax office information here, his information here. So this is for John Adams. This is his address, and this is his 2022 income tax return. This is just a face sheet. I really want to make this bigger, but I'm not able to pull it down. So this again is the invoice sheet. This is how much I would have charged him if I had inputted all of that into the system. I did not. I bypassed all that because I just want y'all to see the completed tax return. This is your data sheet. This is where shows all of his information, name, his social security number, his date of birth, his age. All of this is generated from that little bit of data you put in for him. This is the summary. This is his total income, standard deduction of $12,950 because he's single, his taxable income. So you're gonna arrive at this number by subtracting the deduction from his total income. Taxable income was $13,695. His tax due is $1,436. That's what he owes Uncle Sam for the income that they're saying he's taxable for. This is how much he paid in. He paid in $2,650. So he's gonna get a refund of $1,214. This again is gonna give, huh?
I'm not seeing that. I'm not seeing the that
You're not
you're
seeing
talking.
that?
No, I'm not seeing that.
Results.
Okay.
The screen that says results. Yeah, we're not seeing the summary.
Oh, okay. Oh, girl, I'm just talking. Thank y'all. Can you see it now?
Yes, ma'am.
Yes, I see it now.
Okay,
See it
thank
now.
you. I'm so
Yes.
sorry, honey. I'm thinking y'all
That's
can
okay.
still see. All right.
That's okay.
Okay, so this is the face sheet. Shows my company information, his, his name, address, and what it is. This is his 2022 income tax return. This is the invoice page. This prints out on every tax return. If I had put in his billing amount, it would be here, and it would reflect how much he owed, if it was paid, and if it was a balance due. This is the data sheet. This is the information that it's going to spit out based off of what we put in. His name, his social, his address, his phone number, his filing status. This is it. It'll even show you his effective tax rate. This is a list of the forms that we use. We use the 1040, we use the W-2s, we did a Schedule B, and we had a Form 8879. And we'll go over that in a minute. This right here shows you the summary of his tax return. His total income, his standard deduction, his taxable income, how much he owes on that taxable income, how much he's already paid in, which is the money that was taken out of both of his W-2s, and this is how much he's going to get back, the $1,214. And again, this is just a summary of everything that we have put in. This is a breakdown of his W-2s, his wages, how much was withheld, FICA, Medicare. This is all just informational purposes for you. So then, very important, which is why I'm saying you want to make sure you enter the information as it is on the form, because the software automatically regenerates a W-2. So then when you look at the W-2 he gave you, this should all match. And this is what's actually transmitted over. So he got a second W-2, all that information here. I IRS e-file signature form, the client needs to sign this form, giving you permission to e-file his tax return on his behalf. So you always want to print this page and get them to sign it before you send it off. And it just gives you the information, because I'm, as the tax preparer, I'm electronically signing his tax return for him. And so this is my pen. I would submit a pen for him as well. I didn't get to that part, but I'll show y'all that part later of how I come up with that pen for him. And you want to always keep this form on file. You want to keep a copy of this. You can give him a copy, but you want to keep a copy. Now, when they upload through the app that we have and they sign on the app, it's going to automatically capture their signature on every form that they have to sign, which is very good. So then that way you're not without having your document signed. So as much as they can use the app, I would encourage it, because it saves you from having to get signatures. This is the copy of the actual tax return itself. Hold on a second, y'all. This is bothering me. Let me make it bigger. Okay, that's better, so we can actually see it. So this is the actual tax return. So again, it's just showing his same information that we talked about that was summarized, shows how much he's getting back. Had we entered in his banking information, all that would be populated here. Shows what he had in, interest from the bank. And this is his completed tax return. This is it. This is everything that you would, this is done. This is a simple tax return. Nothing complicated about it. Does everybody think they can do that?
Oh yeah, definitely. I could do that one.
Yeah.
Yeah,
Okay.
that one. I can
Yeah.
do that one.
All right, good deal. All right. So that's your homework. Your homework is to do this. And then I'm gonna go, and then you can, if you know how to download it and then upload it back into the system, you can, or you can just text me and tell me that is done, and I'll go in there and look at it, because everybody should get the same figures. His refund should be $1,214.
So we just go back into our tax pro and do this, right?
Yes.
Okay.
Yeah. That's it. And are we back on now? Can y'all see my page that I'm sharing now, the tax return page? Make sure y'all can see it.
Yeah, the one that says print results.
Yes.
Yes.
Okay, so perfect. So that's basically how you would do it. I'm just gonna go through these other steps. So again, it just kind of takes you back to the summary page, because I did the print. If this was one that if this was in season and we're gonna deduct our tax prep fees out of his money, we'll just keep on going. This right here gets into it. So this is my name. This is my EFIN number. Right here, you see, it tells you the bank is no longer accepting bank products for 2022 tax returns. But if it was, I would have a whole list of things. So basically, I would check right here, how does he want his money? We're going to e-file his tax return, and he wants his money direct deposited to his bank account that he gave us. Again, you can enter the taxpayer's email here. You don't have to. And we're gonna keep on. Oh, let me just go back and just show you something real quick. So can I go back? So I was talking about that PIN number, right?
Yeah.
So I generate the PIN. This is my PIN.
Okay.
This is my PIN. The taxpayer's PIN is always gonna be the last 5 digits of their social.
Last 5. Okay.
Always gonna be the last 5 of their social. The system generates it like that. And it's so funny because even before I started using this software, that's what I would do. I would use their PIN as the last 5 digits of their social. So I was like, okay, well, I had some pretty good thinking going there, because I mean, that's just easier to remember versus them trying to come up with a PIN every year. And that's the authorization that you need to electronically file their tax returns for them. If he had a spouse, each person listed as the taxpayer and the spouse would have a separate PIN, and it would still be the same thing. It's the last 5 digits of their social. My PIN is what I made up. Obviously, you can see it's my birthday, and I just put a 5 behind it. But I'm not going to. So I use the same PIN every year. Now, if this was one that we were preparing for fee, this is how much the tax prep fee for this simple tax return is, $215.
Really?
Yes. We can add other things in there. I don't add other stuff in there. Electronic filing fees. Some tax preparers charge the customer more money to electronically file their tax return. I think that's stupid, because how else am I gonna file it? I'm not gonna charge you to do something that I'm already charging you for. Audit Maintenance Pro. These right here are products we can sell the clients. Basically, you know, everything is what? An upsell. So if they want to purchase a protection plan to where if they get audited and they're found to still owe money, and it was through no fault of their own, not through fraud, not through deceit, but an honest mistake, this would cover whatever extra they have to pay out of pocket.
Oh, okay.
Primary Defend My ID. This is theft protection insurance. You know, everybody got some kind of plan. You can buy this, you know, they can buy it through you as well. We do get paid a bonus off of these different items. I never sell them personally. That's just me personally. You can sell them to your clients if you want to. I'm not going to look at you funny. I will give you your commission. I just personally don't sell them. So then this is their tax prep fee. This is what they would owe. Continue on. Here we go. So then where are we going to put his money? We're going to put it in his checking account. We will put in his bank name and all of that. It's not what he said, but I'm just going to put something on here. And very important, you're going to put these numbers in twice to make sure that you got it right. As you can see, I'm just making up something so I can make sure I get it right. Continue on. And so this is what happens when you don't do the right thing. Must be a 9-digit number, must begin with. Okay. So see how it catches it if you don't do it right? And again, it's telling me that this routing, because believe it or not, it actually knows routing numbers. So it's telling me this is not a real routing number, is what it's saying. It knows routing numbers. So now I got to try to figure out what is the routing number. Does anybody know the routing number for Chase? Let's see. I'm just looking it up on my phone right quick, because it is not going to let me make it. Okay. 111-000-614. Okay, that's right. I was almost right. 111-000-614. Okay, so now I should be able to go forward, because trust me, if you put in the wrong number, you see it will catch it. So which is a safeguard, because you don't want to put in somebody's banking, you know, data wrong, because they won't get their refund. Their deposited, will then have to print them you know, check. And I mean, we can do it, because I get checks every tax season. I get debit cards, and the debit cards are for people who don't have a bank account. So if they want to get their money electronically in a convenient matter, we can put it on a debit card. Like I say, I can print checks. I don't particularly care for printing checks. But if we have to do it, we just have to do it. So, and then this right here just gives you a warning. The option you selected is not a bank product, so your fees won't be collected automatically. Don't forget to collect your fees before you e-file your tax return. Now, you can e-file it without collecting your fee, but it's just reminding you because we know it's very hard to get your fees once you've already completed all the tasks for the client. So this is what it looks like. We've entered in their banking information. See right here, this is my electronic signature that's already in the system. I had actually ended up doing it like on my little mouse pad, so that's why it's all ugly and everything. So we turn around and print it out, this tax return again, you're gonna see the banking information on there. You're gonna see everything on there. And then
Excuse me.
bless you. So
Thank
then and then the amount due would print on that second sheet that that I was telling you about. It would actually show how much was due, and if he opted to pay you out of pocket, you can go ahead and put how did he pay it. He paid you with cash, mark it as paid, so then it's gonna show balance 0. And then the main thing before you get ready to transmit it, in the beginning when y'all first start, and you will mark it for review. That way I can go look at it. Once it's marked for, and so if it was one that I didn't have to go look at and you're done with it, you have to check this, because if you don't check this, you'll never be able to transmit it. So then once you do that, once it's ready, then you see this little button pops up, transmit. And then once you see that, you hit transmit and it goes off into the wild blue yonder. And it is filed and you are done. You have completed that cycle with that client, and now you're just at the point of waiting 2 to 3 weeks for them to get their money back. Sounds easy?
The total change on the right-hand side because they pay the fee in cash.
So what that is showing
Would
is,
it-
so what that's showing is if they were to deduct their fees out of their money, right? This is how
Oh,
much
that's
they would be
right.
getting. Mhm.
Okay,
yeah.
okay.
Yeah. So
That was
when you're
because
talking
we couldn't get it from the bank because it was past the 2017.
Correct.
Okay.
But it still populates it over here for you. So
Okay.
when you're talking to them, you can say your, refund is $1,214. My fee is $215. You're gonna get a, balance of $999.
Okay, I have a
Okay.
question for you.
Uh-huh.
When you mark your tax return for the review, when
Mhm.
you mark that, how long is it from the time right here? Return, how long do you wait for you to review it? Is what I'm asking.
Okay, so what it is if you got one that you want me to go ahead and look at right then, you can call me or you can text me. But my
Okay.
turnaround time should be no more than about 4 hours.
Okay. Okay.
Mm-hmm.
Okay.
Yeah. And then so when it's like that, and then I'm gonna get when I open it up, I'll have a tab that I can go into, and it tells me all the clients' tax returns that are ready for me to look at. I'm gonna save and exit and see if it shows up. Let me see. It should, since I'm the one logged in. Review return. So I will go here. It didn't show up because it was my tax return. But if you guys do it, it's gonna show up. If that makes sense.
Yes, it makes sense.
It makes it right, yeah. So it wouldn't show up because I'm in my own,
Right.
login. Yeah.
I see.
But when you guys do it, when I would go right there and I would see everybody's tax return. But you're only
I
gonna
see.
get to that page if you go all the way through like I did on the banking part. Now, if you think you can go all the way through and get to that point and mark it, great, do it, try it. If not, just let me know, or just, text me and I'll go, or rather I'll go in before class next week
Okay.
and I will just look at it.
Okay.
Okay. I think we covered a lot tonight. What do y'all think?
I think so.
Yeah, so we're down to our first tax return that you guys will be completing. Does anybody else have any more questions about anything that we talked about tonight or even last week?
No, I think I'm good.
I'm good.
You good? Okay. All right, good deal. All right. Any more questions about anything else?
So you're uploading Mr. Adams's return,
Yes.
is it already there? Okay. So all we have to do is go in and fix it.
Go into your lesson, right? And it should be
Okay.
already there. Let me just view it as info student. Make sure I published it because I don't want to say I did and I didn't. Why am I not seeing it?
Go back to 1. Yeah, module 1. Try module 1.
Did I upload?
There it is.
Okay, yes. Thank you. Oh, thank you, honey.
Uh-huh.
Thank you. Yes, that's where it's at. And you download it
Okay.
from there. Yeah, you download it from there.
All righty.
All right. And then if you want to do the print like I did and save it to your computer, and you can come back here and you can upload it. If not, I'm just going to look for it in the software. I'm just trying to keep it simple. I don't want to make it complicated right now.
Okay.
Okay.
Sounds good.
Sounds good. And so and right here, if you go back to the first week, you'll see this is the live class recording from last week. I mean, from
Okay.
the last class that we met.
Okay.
Now, next week is the 4th of July.
Okay. We won't be meeting, right?
I had said we would not be meeting.
Okay.
Is everybody okay with that?
I'm
Yes, ma'am,
fine. It's
That's fine.
fine.
Okay, perfect. Yeah, because I know we would be with family and eating and hot, and but then that following week we're gonna hit it hard, and we're not missing any more weeks after that. We're gonna be all the way
Okay.
to the end.
Okay.
Okay. Yes, ma'am. But just know next week you'll have your assignment to, get it in by next week.
Okay.
And if you run into problems, please call me, text me, whatever. I will try to walk you through it, or I'll try to log in with you and we can get it done.
All right.
So like I say, it's second nature to me, but I know it's new to, y'all. So I take for granted that stuff is, you know what I'm saying? Because like sometimes you just forget that it's new. So
Yeah.
Yep. Okay.
All righty, ma'am.
All right, I'm gonna stop sharing. And then see, can I end my recording? All right, recording I'm in. All right, we got, ladies, it's been nice, it's been real. And we're gonna go ahead and end for tonight, and I will see you all next time.
Okay.
Just one
Okay.
thing, Miss Lynn.
Yes, ma'am.
I hadn't received the email back